to the money conversation. Today, I want to talk to us about investment. Yes, investment. I want us to look at the basic matrix every investor should watch in a company's financial statement. And why am I doing this? I'm doing this for new investors, people who want to start investing in shares, in stocks, and all. And I've had a lot of people say, you talk about investment. We don't even understand when to buy and when to sell. And that is the purpose of today's conversation. My name is Theodora Otu, like you know, the money woman, the financial lord, the Odogures of money. So I'm going to be giving us 3 matrices to focus on. If you are new at investing, reading financial statements might seem complex. It will look like these people are just speaking gibberish, right? So how do you know what to look out for to be able to say that a company is viable, to determine which company stock to invest in? So let's look at it. The first you need to look at is the top line, which is called the revenue. You need to look at the company's revenue or top line. And what is top line or what is company revenue? Is simply the total income a company earns from its primary business operations. The total income that a company earns from its primary business operations. So why does it matter for you to know what the top line or what the revenue is? Simple, because growing revenue often signals increased demand for the company's product or services. So if a company's revenue is always growing, increasing year on year, and it is consistently growing, then you should know that the company's products or services are in high demand. And what should you watch out for? You should watch out if the revenue is increasing quarter on quarter. Most times you see it illustrated as Q on Q, Q O Q. That's quarter on quarter. Alright. You watch out to see if their revenue increases QOQ, which means every quarter, or if it increases year on year, which is illustrated with YOY. A consistent upward trend shows that there's business growth, and this is a good place to buy stock or invest your money in. Alright, so the second matrix you should look out for is profit after tax. Profit after tax, which is PTA or net income, and it is called the bottom line. So we first of all looked at the top line, which is the revenue. Then the bottom line is a profit after tax. You do know that revenue does not necessarily mean that the business is profitable, right? So you also need to take a look at the profit after tax, which is the net income or the bottom line as it is used in investment. Now, what is the bottom line? This is the profit left after all the expenses, taxes, and interest are deducted from the company's finance. Okay, you might have a very huge revenue in a quarter, and after deductions, you see that you are running at a minus. So you need to know what is left after all expenses, after taxes have been paid, and after interest have been deducted from the company's revenue. Now, why does this matter? The profit after tax actually shows the actual profit of the company. It shows you if the company is actually profitable and by how much, right? By how much? Is the profit margin really high, or did we just manage to cross into profit? You need to know all these things. And what should you watch out for when you're reading the company's financial statement? The first thing you should watch out for when you're looking at the profit after tax is the improvement compared to previous periods. So you need to look at, okay, last quarter, by how many percent did their profits grow? Some companies have 20% year on year bottom line. Some companies have 25%, some companies have 30%, some even have 10% year on year growth or 10% quarter on quarter growth. So you need to know what is the difference between the last statement that the company released and the present financial statement that the company is releasing. A sustained growth often translates to better returns for investors. So if the growth is sustained, as in you are having even as little as 10% year on year increase from the previous year, then it means better returns for you as an investor. Now the third thing you need to look at, the third matrix, is earnings per share, EPS, earnings per share. And what is earnings per share? When the profit after tax is divided by the number of outstanding shares, right, it indicates how much profit is attributed to each share. So when that profit after tax is divided, according to the number of outstanding shares that they have, it now indicates how much profit will be allocated to each share. Alright, and so why does it matter? It matters because a rising earning per share reflects improving profitability for your investment. When the earning per share last year is this year is higher than the earning per share of last year, it improves profitability for your investment. Okay, so it means that is a profitable company, and if you put your money into buying their stocks or their shares, you're surely going to make profit. Now, what should you watch out for when you're looking at the earnings per share? You should look at, is the EPS growing consistently? Is it growing consistently? EPS can also estimate the potential dividends per share, which is DPS, the potential dividends per share, especially if the company maintains a steady dividend payout ratio. So for example, if a company typically pays out 50% of its earnings as dividends, an EPS of 4 naira could imply an expected DPS of about 2 naira. I hope that is clear, and I hope that right now you are all geared up, you are well informed and ready to jump on the next shares that will be advertised in the market. Look at bank statements of different banks, say Zenith Bank, Guarantee Trust Bank, Fidelity Bank, and even companies like Dangote, a lot of these companies. Look at their EPS, look at their top line, and look at their bottom line, and compare it to what it was in the previous year or in the previous quarter. With this little information, you can be able to make a very intelligent decision about which company to buy shares from. Until I come your way next time with another enlightening and key information that will lead to the growth of your business or your finances, I remain your favorite money woman, the financial lord, and the Odoguress of money. And don't forget, I'm always rooting for your financial success.